Hello and welcome. The experts at My Tax Accountant have put together this special briefing because, well, a huge change is coming to your financial data right here in the UK. Starting in 2026, the rulebook for digital money is being completely rewritten, and HMRC is about to get unprecedented access to your crypto transactions. So let's break down exactly what that's going to mean for you.
So let's start with a big question. Imagine this. You make a crypto sale, and before you've even had a chance to update your own spreadsheet, HMRC already knows about it. Is that really the world we're heading towards? The answer is a lot closer to yes than you might think, and the implications are just massive for anyone with a digital wallet.
Now, to make sense of all this, we're relying on the deep analysis from the team at My Tax Accountant. They've spent the time sifting through all the complex new regulations to give us a really clear picture of what this means for freelancers, for small business owners, and pretty much anyone with a side hustle in the UK.
Okay, so first things first, let's get our bearings and understand the rules as they are right now. As of today, how does HMRC actually get a look at your bank data? There are a lot of myths flying around, so let's just quickly set the record straight.
Right, let's bust the biggest myth out there. HMRC does not have some sort of magical key to browse your bank accounts whenever they feel like it. They can't just go on a fishing expedition through your spending. It's not how it works. There is a very strict, very formal process they absolutely have to follow. And that process is called a Financial Institution Notice, or a FIN for short. Think of it as a legal demand for a taxpayer's information. And the crucial part, the bit you really need to remember, is that it requires reasonable justification. They can't just issue one on a whim. There has to be a real, solid reason to suspect something's not quite right. So what counts as justification? Well, an investigation could be triggered by some major inconsistencies in your tax return, maybe a tip-off about undeclared income, or clear evidence of fraud. And often, they even need to get approval from an independent tax tribunal first. So you see, it's a very targeted process, not some random dragnet. But all of that is about to change. And now we get to the main event. Starting in 2026, a truly revolutionary change is going to completely alter the relationship between your digital assets and the taxman. Honestly, this is probably the biggest shakeup in tax reporting in a generation. For years and years, digital finance has kind of operated in this tax gray area, right? Well, that gray area is about to become crystal clear. So stay with me because this next part is absolutely crucial for anyone who holds or trades any kind of digital assets.
So what's behind all this? It's a new global standard called the Crypto Asset Reporting Framework, or CARF. And what it does is it forces crypto service providers, we're talking exchanges, brokers, even some wallet providers, to collect your data and then automatically send it straight to tax authorities like HMRC. The EU has a similar version of this called DAC 8.
And just look at this timeline. This isn't some far-off idea. On January 1st, 2026, that's just around the corner, the data collection begins. Throughout that whole year, platforms will be compiling a complete record of your activity. And then in early 2027, the very first reports land automatically right on HMRC's desk. And make no mistake, this isn't just a UK thing. This is a coordinated global shift. 52 countries have already signed up to implement these exact same rules. It's a worldwide move toward total tax transparency in the digital asset space, and it's effectively ending any idea of cross-border anonymity.
So here is the core change in a nutshell. Before, the system was reactive. HMRC had to have a reason to ask for your data. The burden was on them to do the digging. From 2026, the system becomes proactive. The exchanges you use are now legally required to send your data to HMRC automatically every single year. The burden of reporting completely shifts away from them and onto the platforms. So what exactly gets reported? Well, essentially everything. Your Know Your Customer details, that's your name, your address, your ID, a full log of every transaction you make, your wallet information, the whole shebang. And this covers everything from Bitcoin and NFTs to tokens from decentralized finance, or DeFi. So for example, if you're a freelancer in London and you get paid in Ethereum, that entire transaction chain now goes straight to HMRC.
Okay, so why is HMRC so keen on getting all this data? What's really driving this unprecedented push for information? Well, if you look at their own annual reports, they pretty much tell the story.
It really comes down to three key numbers. First, the tax gap. HMRC is looking to recover a staggering £7.2 billion in tax losses. Second, they're prepared. Their staff have completed over 80,000 digital and data courses. And third, they have the capacity. They already process 78 million digital customs declarations a year. They are a data processing machine, and they are ready for it.
And they know that people are a bit wary of all this. In their latest annual report, HMRC acknowledges that they'll be using AI to analyze all this data, but they offered this reassurance, claiming a human in the loop will always be there for key decisions. That's their official line anyway. Now, this crypto reporting isn't just happening in a vacuum. It's actually part of a much wider government trend. There's a new piece of legislation, the Data Use and Access Bill, that's also expanding the state's power to collect and use our data. And it's got privacy advocates deeply concerned. Civil liberties groups, like Big Brother Watch, are really sounding the alarm on this one. They're arguing that while the government talks a lot about efficiency, what these new laws actually do is create a framework that could be used for widespread surveillance with far fewer checks and balances.
One of the key concerns is something called automated decision-making, or ADM. Now, this is where an algorithm, not a person, makes a significant decision about you. And the new bill, well, it relaxes the rules around what counts as meaningful human involvement. That phrase is really doing a lot of heavy lifting.
So what are the actual risks? Well, critics are warning that an algorithm could use something as simple as your postcode to make biased decisions. If an automated system flags you for an investigation, you might never even find out why. And appealing that decision becomes incredibly difficult. You're basically trying to argue with a black box.
Okay, so we've covered the old rules, the new rules, and the wider context. Now for the most important part. What on earth should you be doing right now to prepare for all this? Here's a quick pro tip for you, straight from my tax accountant. If you've been mixing your business and personal finances, you need to stop now. With this new level of automated scrutiny, keeping clean, separate records is no longer just good practice, it is absolutely essential. Right, here is your action plan. Step 1, document everything. I mean everything. Start today. Every single crypto transaction, every payment you receive. Step 2, be proactive. Do not wait for that brown envelope to drop through your letterbox in 2027. Get your affairs in order now. And step 3, get professional advice. The rules are complex, they're changing fast, and the penalties for getting it wrong are high. This is really not the time for guesswork. And on that note, please do remember that the information in this analysis is for general guidance only. It is not a substitute for professional advice that's tailored to your specific situation, and you really shouldn't rely on it exclusively to make your financial decisions. To navigate these really complex changes, it's vital to get expert advice that is tailored specifically to you. For specialized guidance on the new crypto rules or any other tax issues, you can contact the team at My Tax Accountant. You can reach them on 0208-570-8531, or you can email them at info@mytaxaccountant.co.uk. And for more updates like this, make sure you subscribe to their channel. Thanks for joining me.